Good morning. Tuesday, May 30th, 7 a.m. in New York. Good afternoon to all you folks over on the other side of the pond. Welcome in. We are back at it. Day 2 of our $10K to $2 million funding challenge. We have our credentials. We have logged in. I took a micro trade yesterday to start the 14-day payout calendar clock ticking. So we're on the clock. Our first payout will be 14 days from now. Now, this is not how Bespoke typically does it. They were running a discount code when I bought this challenge where I got a certain percentage off, and it included with that discount 14 days to your first payout. Typically it's a 30-day to your first payout and then 14 days thereafter, but with this discount that I used for this challenge, it's only 14 days to the first payout. So I'm very excited about that. Also, their normal profit split is 80%, and the last benefit of this challenge was an 85% profit split. So we'll see how all that goes. We've got to just sit here at the charts and find our good setups and see what we can see. So it was interesting. Yesterday played out exactly the way I said it was going to play out. With just a lot of ranging around, not really any big movement. Major holiday, banks were closed. And then overnight with London, things played out pretty much, Asian and London, things played out pretty much exactly what I said was going to happen with the dollar and with the euro. I said I was favoring a bullish dollar up to closing this volume imbalance on the daily, and it went up right into it, filled it all the way in, and then we've had a massive rejection off of it. On euro, we highlighted this same weekly volume imbalance right here inside of this daily volume imbalance here. Euro overnight came down, slammed into it, and we've had a massive rejection back up. Now, what does that mean? I mean, are we gonna be major bullish? I mean, maybe. Price has reached his complete price objectives that we found back here a couple of weeks ago. These were all the areas we were targeting for the downside objective. They've now been reached, they've now been tapped into, and we're still in a downtrend. And just because you have one bullish day in a downtrend does not mean that the overall downtrend is completed. We would need to see a convincing break above these highs right here to really get into bullish market structure. So I could be bullish for the day, but not change my higher time frame bearish outlook currently, because until you get a change of structure on these higher time frames, then you just have to be more nimble and be more neutral. And if you have to be able to react a little bit more to what you're seeing in the market. And this is why a 1 to 2 risk reward is so key, because you can have your bias wrong, you can find a good setup, get a 1 to 2, and then the market can continue on in the opposite direction of your winning trade because your bias was not completely accurate. Another beautiful reason why 1 to 2 is such a nice strategy, risk management strategy. So you have some relative equal highs up here. You have this old weekly volume imbalance up here. You have a fair value gap currently from last week. From the last 3 weeks, there's some space up in here that price may be wanting to reach up into, and we're at the end of the month, so it could be creating its bottom wick here over the next 24 to 48 hours. So that's the way candles print: open, high, low, close. We had an open, a high. We've had our low, I think, probably for the month put in today, this morning. So this is why I would probably be more bullish on the next 24 to 48 hours. But then after that, I have no idea. No idea. Welcome into the stream, guys. Corey, good morning. Beeswax, good morning. Glad you guys are here. Hope you're doing well. Hope your Memorial Day holiday weekend was refreshing and relaxing. But we're going to get into some chart analysis. If you have a question about something, put it in the chat. And as always, if you're liking what you see, you're getting value out of it, if you could push the like button, that would be helpful for the channel. Since we're doing all this here for free, it could help this channel get out to some more people, even though there's only 9 or 10 people watching right now. Maybe more will pile in here in a little bit. Perhaps after the stream yesterday and hearing me say we may only take 1 or 2 trades a week, they were like, you know what? There's other guys out here that are telling me to trade 2 or 3 times a day, and I'm going to go do that. That's cool. You can go do that. Enjoy failing those challenges. Because until you stop taking so many trades, and until you clearly understand what your A+ setup looks like, until you become a hunter and stalk price and stalk that trophy buck that you want to take down, you're just going to be frustrated. So we're going to be patient. We're going to watch. We're going to wait. And we're going to see what happens. So you have a nice hourly on the euro dollar. You have a nice hourly breaker block that has been formed to the upside. You have relative equal highs right up here, and you have more right up here. And so for the next 24 to 48 hours, that could be where price is wanting to run. Now that we've got some positive news for the debt ceiling coming out, the euro dollar has traded into its volume imbalance and rejected severely away. And so this is what an A+ setup looks like when you have a drawn liquidity, you have a run of sell side liquidity, could be buy side if it was the opposite way, but in this instance you have a run on sell side liquidity into a drawn liquidity that you have anticipated price reaching into. And then when price reaches into it, you have displacement away in the opposite direction of the liquidity grab. And in that displacement, it leaves behind a fair value gap inside of a breaker block. You could use this as your breaker block. I would probably use these 2 candles as my breaker block, and I would be targeting, I would want to see perhaps here in the New York session a pullback down into this area before we look for higher prices this morning. Good morning, Michael. Welcome in. So that's kind of where I'll be watching on the euro dollar here. If we drop down to the 30-minute, here is your 1 hour breaker and here's all your fair value gaps. Price has just offered nothing but buy side. Nothing but buy side. So we'll just watch and wait, and we'll see if price does what we want it to, and if it does, then we might participate in seeing if we can knock out a 1 to 2 trade. But if it doesn't, it doesn't, and it's fine, because tomorrow the market's going to be right here, and it's going to print these beautiful setups, and one time it's going to do what we want it to do, and we're going to take it down. And then we'll sit back and we'll wait, and we'll just enjoy the view. That's all we're going to do. Just learn to enjoy the view. I'm going to go ahead and take off some of this stuff from our previous sessions analysis and winning trades and all that kind of stuff. Just to kind of clean up the chart a little bit here. And we can take off some of this stuff up here. I'm going to get rid of all that. I'm going to leave this on here. This is our weekly volume imbalance, and it can act as resistance if price reaches up into there. And so, you know, if price just runs through that today, if we just get nothing but bullish action all day, I'll probably just stand by. Like, I'm just going to watch. We don't chase trades. We don't just try to, oh, well, it's just going to go up. It's just going to keep going up. You have no idea where the draw on liquidity is. You have a good idea, but you don't have a perfect idea. And so we watch and we wait for the clues to appear. Little aside, I had someone leave a comment on a video. It was either yesterday, I don't know which one it was, but they were like, you need to turn down that music. It's too loud. Just turn it off. I don't know. I kind of dig the vibes while I'm trading, just having some tunes behind me. I know it's the same damn playlist that I've been playing for the last 2 weeks, and I need to change it. But is the music too loud? Or should I just turn it off? I mean, do we even need that? I guess if I was going to do like a highlight video later and there's music on it, it might mess it up because you've got music behind it. But I don't know. I don't really think like that. But just doing what I thought I would like to do. But if it's annoying to have music on in the background, we can lose it. Michael says it's fine. You know, he's 1 out of 9. Georgie says it's fine. Corey, it's not even loud. Yeah, I didn't think so. Like, to me, I could see where that would get annoying. Like, if it was that loud. That could get annoying, right? I mean, but I have it like way down here. It's just like barely in there just to cover the dead space. I don't know. A different Michael. Hey, Michael. I'm in Texas. H-Town all the time. Man, Houston is the most multicultural city in the United States. It is the melting pot of the world for the United States. There are more cultures and languages spoken in Houston than there are anywhere else in the United States. You want to get some good food, entertainment, I mean, literally it has everything you want. And it's so big. I love freaking Houston. And probably going to start repping some Astros gear here because they're turning it on right now, and they're my team. And don't give me the cheater trash can gifts. Get over it. Literally everyone was doing it. It doesn't make it right, but we won. We can take all the championships away from the performance-enhancing, drug-induced Yankees for all of their runs if we're going to take the Astros away. If you don't follow baseball, then don't worry about it. I do. All right, so we're into the 7 o'clock hour here in New York, and price is just on a massive bull run right after reaching into, we called this yesterday. I was really hoping it wouldn't do this overnight. I was really hoping it would leave all of these lows in place for London and then give us an opportunity to, maybe grab some liquidity up before it dropped down into this zone today. But it's already done it, and it's already taken back off. But that's okay. It's leaving us a decently good setup here where you see this beautiful grab of liquidity and then displacement away. Interestingly enough, The pound did grab some liquidity, but it did not come down as far as the euro did, and it has also now run away. It grabbed a little bit of liquidity right in here, and then it's just been also running away at a ridiculous pace. This area right here, I believe, was off of a 15-minute breaker right here. And we have, that breaker has held all the way through. And we have created an engineered relative equal highs up here for the pound dollar to eventually target. But right now, it's a very similar situation. I would be more inclined to look at the euro only because the pound didn't grab all of its liquidity down here like the euro did. But you know, we'll watch and wait. If it engineers some liquidity on a lower time frame, it's got a lot of price to reprice and provide efficient price delivery here through all these fair value gaps. Just like the euro, if you drop down to the 15-minute on the euro, you can see we've got a lot of different fair value gaps. So what do we want to anticipate? Well, I've already told you. You've got a 1-hour order block right here. This was the move up that created this move down. Grabbed all liquidity and displaced back through it. So we don't want to get involved in here until we don't want to buy high. If we want to anticipate price running up into some of this liquidity here, we don't want to buy high. We want to buy low. And so we want to see price come back down into a discount area, and preferably down into here. That's where I want to see it. And mainly because if you take this draw off of the London lows currently up to where we are right now, your 50%, your discount area is back down here. You do have a fair value gap all the way back down in the OTE area. And if you wanted to identify this as your breaker block, that would also line up with this fair value gap in around that discount area. And you're like, oh man, how long is it going to take price to get back down there? Or is that even possible? Are we going to take a trade? I don't know. I'm just telling you, this is how you identify and look for trophy bucks. But it may not. It may not get all the way back down here. We might see price engineer liquidity on the 15-minute time frame somewhere around here. And then towards the end of the trading session, maybe price dips into this fair value gap close to it and we get displacement away. Or maybe it happens tomorrow. Maybe we've had this big, huge expansion off of the London session, and now New York, as we enter into the last couple days of May, is happy just to piddle around right here and not do anything. We have no idea what the market's going to do. We don't know how the waves are going to roll in. We're just watching. And if we see what we want to see, then we'll participate. So that's kind of what I'm anticipating here on Euro. Is I'm going to want to see a pullback down into at least this area here, because we could just be reaching for liquidity here, and we could be reaching for liquidity here to come back down into this weekly volume zone again. And so we're just watching. We've got to be, because price has reached its overall longer term objective, it doesn't mean that it can't keep going lower. And so you would expect this kind of reaction off of this area, but that doesn't mean it's going to sustain now a reversal for the. I think I'm more inclined to think it's going to be bullish for the next 24 to 48 hours. And then once we get into June, who knows? We're just going to have to watch and wait and see where the market is engineering liquidity before we try to do anything. So that's Euro. You can look at the dollar. Dollar did exactly what we wanted. It filled in our volume imbalance right here that we pointed out yesterday and dug into the Goldilocks zone of the OTE from our huge leg down here. And so now we're reacting off of it. We've taken out yesterday's high, we've taken out Friday's high, and we've moved back down. And this is another reason why you could anticipate a slightly bearish dollar over the next couple of days, is that you do have some rebalancing. If the dollar wants to go higher, you would anticipate price wanting to come back down. Where would we anticipate it potentially coming to? At least there's 50% is right inside that fair value gap. Your OTE is down into this order block. So, that all looks really good to me. And that's why, again, I think for the short term, I'm going to hold a slightly bearish bias. I'm not calling this a top or reversal, but I think it's due after this run up and you're at the end of the month and all things considered what's going on. I think it's due for just a little bit of a pullback. I think it gets down into bare minimum into this fair value gap, even if it's just a little bit. And so you can already see it's had quite the expansion for the day when you compare today's daily candle to everything else. We've already had quite a bit of an expansion. So to anticipate the dollar continuing to have a candle whose body closes down inside of here today, that's a lot. You're asking a lot of it. It can do it. You can see that we've had some larger candles, but overall, it's pretty much in line with its average expansion of what we're doing. Friday's low is probably the next goal for the dollar if it's going to reach for liquidity. You can see on the 4-hour, here's your drawn liquidity right here. You've got relative equal lows here and here inside of fair value gap. So that's the first drawn liquidity. You've had a break of structure here. We'll see this 4-hour candle just opened on the dollar. It has a little bit of a different time, the way it counts hours because of when it trades. So we'll see how this 4-hour candle prints. It'd be interesting to see if it comes back up into here, this area, and then we roll over back down to maybe reach for some of that drawn liquidity there. And that would line up with if the dollar is going to do a little retracement, then you would expect some retracement on the pound. You would expect some retracement on the dollar as well. I mean, on the euro. So if we look at gold, gold hit our overall objective. Again, I told you guys yesterday, gold still had more work to do. I was really hoping it would leave that for us to get in. It did not. It has just now reached in, grabbed that liquidity, and it has rejected off all night long. So it has also reached its drawn liquidity objective, and it has now taken out, though it's still got a drawn liquidity here, and then these relative equal highs up here as well would be its bullish buy side liquidity. So after seeing this move here up on the 1-hour, these 3 consecutive up candles produced the drop that grabbed liquidity, and we had displacement away from the liquidity grab, leaving behind a fair value gap here underneath the breaker, and there's one right above the breaker. If you drop down to a 30-minute, you can see that fair value gap did get filled in there, so it's technically, it's not open still, but this is your kind of area right here. So, you would want to see gold pull back a little bit down into this area and see what happens around this 15-minute order block right here, which is in line with this breaker. There's a little fair value gap right there at the top. So that's where that's the first place I would look for gold. Before I would want to take a trade higher, I would want to see it come somewhere down into there. And I'll just, I make my 4 value gaps orange on this chart. So we'll see what happens if gold gets back down there. We'll set an alert there. On the pound, you know, bare minimum, this 30-minute fair value gap just got completely smoked. It's what caused this initial draw and engineered liquidity, and it has now just gotten smoked. You have a fair value gap right here. Perhaps that's where it gets a draw and then comes back down before it wants to roll over higher. But we're just going to watch and wait. I don't really have a specific area here that I want to mark out. I want to see price start moving back down on the pound, as well as euro. I want to see it come back down into this level. This is the earliest place that I would want to see how price, if it pulls back, what happens right around there, which lines up with this 15-minute fair value gap and this 15-minute order block right here. So we'll kind of watch and wait here on the euro and see what happens here. I would look to do which is inside this 1 hour breaker here. You could use this breaker as well, but this is the part I would be looking at. And I'm going to set an alert about 50% of the way through there. And let's jump over to US 30. So US 30 gapped up over the weekend from the holiday, and it's now completely filled in. And when the dollar's moving down and the indices are moving down, this is when you expect price to fill in that gap. It's completely filled that gap in now. And we'll have to watch and wait and see what happens with these markets. What happens? Need to check a message real quick. All right. Good afternoon, T-Lo. Welcome back. So US 30 has reached back up into an OTE of this leg down. It has reached a draw in liquidity, and we've had a break back into this range, which we didn't want to have anything to do with. So what do I see here? I see you've had displacement back. You've had this draw and then displacement back inside. If you're bullish on indexes and you think that, you know, the debt ceiling is going to be good for the markets, then this would be a bullish scenario, in that you're anticipating price to come back down before it starts running up. It's interesting that the dollar's moving lower and the indexes are also moving lower here. So I just, when they're moving with each other, I just stay away. I want to see a separation. I want to see the dollar moving lower should mean it's a risk off scenario and the markets should be climbing higher. So this is giving mixed signals between what the dollar's doing and what the index is doing. So we're just going to need to watch and wait. I'm not going to mark any areas on the US 30. I want to see the dollar and the indexes separate. I want to see them moving in a healthier way, meaning that when one is moving lower, the other one should be moving in the opposite direction. How much your risk unfunded? I'm 2% every trade. I don't change my risk management. I know what my strategy is. I know what my win rate is. And I risk 2%. And the other reason I'm going to do that is when I'm copy trading, and after we get a payout here in 14 days, hopefully in 14 days when we get a payout on this account and we get a refund, we're going to buy another account. And we're going to set those two accounts up on a trade copier. And I will use this 10K funded account from here on out will be my master account that I will use to trade every other account off of. And so if I buy a 25K or a 50K or a 100K, whatever I can buy next, then I will use this account to manage that. And so I will set up, I will be trying to reach 8% to pass the next challenge, and I'm going to be using this 10K master account to do it. And so I'm going to be trading to pass challenges until I'm funded with $2 million from Bespoke. I'm going to be constantly trading to pass challenges. This is the only time in this whole process where I'll only be trading one account. I will always be working on a challenge, a phase 1, a phase 2, or both and, depending on where they are at the time, because this account is going to get payouts every 14 days. So while I'm passing challenges, I'm also getting payouts and buying other challenges. And so we're just stacking them. So I'm always either going to be trying to make 8% or 5%, 8%, 5%. So I'm going to be risking 2% per trade on this 10K funded account on A+ setups. And also, that's going to be helping me follow my strategy to pass challenges, which is what I'm trying to show you all how to do, how to pass challenges consistently. So that's what we're doing. Muhammad, welcome in, buddy. Good to see you. I'm glad you like it. I'm glad you like what you hear. And if you're learning something, if you're getting some value out of this, then I would appreciate it if you hit that like button. That's all I'm asking of you guys is like and subscribe. It will help more struggling traders find out about what we're doing here and hopefully give them some help along the way too. There's no reason that 90% of people should be failing these challenges. There is a way to stop doing that. And if I can help take that number from 90% failed challenges to 85% failed challenges, that's a huge percentage gain when you consider how many people are buying challenges every week. So, yes, I am. Yep, Muhammad, we just talked through what we're anticipating is possible setups for long for buys on Euro. Absolutely. I've already got an alert set here, and so we're not going to be wanting to do anything until we see a return at least down into this area. We have a 1 hour fair value gap. I'm on the 15-minute time frame here, but this is our 1 hour breaker, and we've got fair value gap sitting inside of it. We've had a run up after liquidity has been grabbed, and now we're just waiting for price to come back towards the discount area and see how it responds and reacts off of this order block right here on the 15-minute time frame. Also on gold, a very similar setup. So we have an alert set on gold as well, and we'll watch and wait and see here in the New York session in the next couple hours how that goes. I need to look at my morning and see how long we can stay on here today. Probably can stay for at least another hour, maybe a little bit more. Yeah, probably I'm looking at my clocks above I have the classic trading clocks above my head: Houston, New York, London, Tokyo. So I'm looking at my times here. So when I'm staring up, I'm not like trying to sneeze or something. Let's see, it's 6:30 here. Yeah, I could probably stay for at least an hour and a half today and talk through the market as it plays out and see how it goes. Get back over here on the chat. You guys are putting some stuff in there. Welcome, Steven. Glad it's your first day here. I hope that hope it's helpful for you. And always put in the chat where you're at. I kind of want to know where you guys are in your trading. Are you in a challenge? Did you just fail a challenge? Are you funded? What are the things that you're struggling with that you're finding difficult to overcome? Yeah, I do use the breaker and fair value gap with liquidity grab. That is my A+ setup. Do you show your screen when you take the trades? That way we know when to place our entries. I tell you exactly what my entry is. I tell you exactly what my stop loss is. Like if this was going to be a trade and I felt like, hey, this fits my setup, then I would tell you I am putting my entry right here, I'm putting my stop right here, and I'm putting my take profit right here. I will read off the entries that I'm taking on my MT5 account with Bespoke, which is an 8-cap server, but not every 8-cap server is the same. Depending on what prop firm you are, it might be slightly different. But I will tell you what I'm doing. I'm not hiding anything. I'm not leaving it up to guesswork and being cryptic about anything. I'm just showing you how I do this. This is not a trade. I'm just telling you that's what it will be. And if I don't do it here live on the stream, if a setup happens after I get off the stream, I will post it on Twitter. I will put trade update, and then I'll tell you what the pair is, and I'll say sell limit or buy limit, and then I'll tell you where my entry is, where my stop loss is, where my take profit is, what my risk is, all of it. I'm trying to be as transparent and clear as possible with everything I'm doing. So you can see on the 15-minute time frame here on gold, we've got a no-wick candle that has opened. We have a no-wick candle here. We have a no-wick candle here. Those are all draws on liquidity. So typically price is going to want to reach back down and not leave a... It doesn't like when there's no wicks on those candles. Those can act as draws on liquidity. So I don't use them to trade off of, but I do use them to identify where my price want to reach to, either for profit targets or for, just liquidity draws. What's up, Ahmad? Good morning. Welcome in. Glad you guys are here. So that's gold. Dollar is dropping lower, and again, we've identified this as our first draw on liquidity for the dollar area here. You've got relative equal lows right there, which is sell side liquidity. That's our first draw on liquidity for the dollar. That's where we're anticipating the dollar to reach to, and if it does, then it's also going to start... we would anticipate that we would want to see the dollar come up into this area before it comes down, so that our euro trade would come back and then go down. And it may not give us any pullback. It may not give any pullback whatsoever. It may just be ripping higher, and that's fine if it does. No big deal. It does not matter. I don't care. I don't care. I want to see price do what I want to see price do. And if it doesn't do that, then I just enjoy watching everything happen. There's beauty in the way the market moves, and learn to appreciate it. Learn to watch. Learn to sit here and watch. We didn't take a trade yesterday. We may not take a trade today. We may not take a trade tomorrow. And then Thursday and Friday, we might get two incredible setups. And in the end of the week at 8% profit. So we're just watching. There's no reason to put money at risk in less than an ideal situation. That's gambling. And I do not want to gamble. I want to take the highest probability setup I can find. These are the draws on liquidity here. These relative equal highs. Excuse me, got the yawns. Time for some coffee. So we want to see a pullback before it reaches up to grab these relative equal highs up here. So if that's going to be our draw on liquidity here, we want to see it leave that alone. We don't want that to run, because that could be where it runs and then we get displacement back down lower. But we're just watching. That's all we're doing. That's what I want you guys to understand, is that this should be your default mode when you sit down the charts. Is I'm not taking a trade today. I'm just watching. I'm sitting in my tree stand. I'm sitting in my deer blind. I'm enjoying being out in the woods, and I'm waiting for that trophy buck to show up. And I'm not doing anything else unless he does show up. And if he doesn't show up, cool. It was a beautiful day sitting out in the woods, enjoying the beauty of what the market provides. So we're hunters. We got to act like hunters. So we got to be patient. Is that Job Daily or Job Daily? I don't know. I think it's Job. Welcome in. Glad you're here. For those who are watching the stream and weren't here for the whole stream yesterday, I'll lay out exactly what I'm doing with this channel. I'll lay out while we're watching here. We'll just watching while we're watching and waiting. I'll just talk about the plan. So I have been where you're at. If you're failing challenges, I've been there. I started trading 4.5 years ago. It wasn't until the last year that I became profitable and funded, six-figure funded, more than 100K. That doesn't matter. You don't even need to worry about that. That has nothing to do with what we're doing here. Okay. Consistently profitable in the last year. And I failed over 30 challenges. Failed them. Blew them. Some of them, in the beginning, I couldn't pass a phase 1. And then I couldn't pass a phase 2. And then I have lost a couple small funded accounts before now I have my larger funded accounts locked up. So what I'm doing here is trying to show you how you can take a small 10K prop firm funded account, where this cost me $100. With taxes, it was just over $100 to do this 10K account with Bespoke. And there are companies out there that you can buy a 10K account for they're running 50% discounts right now. You can get in on a 10K account for less than $100, but let's just say $100 because that's what I spent. I spent $100 on this 10K account. We passed it in 13 trading days. We passed phase 1 in 7 days. We passed phase 2 in 6 days. We took 10. I want to say we took 10 trades in those 13 days. We had 4 break evens. We had 1 loss, and we had 4 winners. And that's what got us funded. 4 winners. Phase 1, phase 2 knocked out. Now we're here sitting at 10K funded account. And the plan is to take the profits that I make from this 10K account and buy the largest challenge that I can from those profits. I'll be getting my refund back. So with that first payout, bare minimum, I'll be able to buy at least one more 10K challenge. But hopefully with the profits that we make over the next 2 weeks, I can buy at least a 25, a 50, or a 100K account. We'll just have to wait and see how we do with profit, and we'll go from there. But we'll just buy whatever, I'm going to buy whatever the next challenge is that I can from these profits. Then I will continue to trade this 10K funded account. Excuse me. And every 14 days, pulling out profits to continue to buy more challenges, all the while trying to pass phase 1 and phase 2 of the challenges that I have already purchased. And then as those become funded, doing the same thing, using profits to buy. And we're just going to snowball these accounts until we can stack $2 million in funding. I will take profit. I won't just spend every single dollar I get on buying challenges. I will buy one challenge from my profits. So for instance, let's say the what if game, okay? If we get into, we're 6-figure funded on this account, and let's say we're funded over $100,000 combined on this account. When I get a payout off of that 100K account, I will buy one challenge, whatever it is. It just depends on what that payout is, but let's just say you get your refund and you can buy at least another 100K and maybe something else. But then whatever's left over, that just goes back to daddy. Because you need to pay yourself along the way. You need to enjoy the profits that you're making, and you need to have funds left over to buy other challenges should you lose an account or whatever may happen in your trading career. And you just need to be able to freaking enjoy the reward of becoming a consistently profitable trader. So we're not going to spend in the beginning here in the early stages. We're going to be spending every dollar of profit that we make back into the business, because this is how businesses operate. And if you're going to operate this like a business, you need to reinvest your funds back into your business. You're not going to change your life with a 10K funded account. If you're making 3 to 5% on a 10K account, that's $300. Okay, yeah, it's $300, and I don't want to make light of $300, but it's not going to change your life. It's not going to let you leave your day job if you're making $600 a month, $300 every 2 weeks. You can't find financial freedom with that. The ticket and the secret is to get max funded. And you should be trying to do that, because then when you're max funded or as close to max funded as you can get, 3 to 5% is life-changing money. Life-changing money. And that should be our goal. Why would it not be your goal? Why would it not be your goal? So that's what this whole series of videos is about. taking a 10K, investing $100, that's actually a deposit if you get a payout, because you get that $100 back. So you have to put it up to buy the challenge. But then if you can get funded and get a payout, you get that money back. So your return on investment potential here is infinite. If you invest $100 and you can continue to consistently pass challenges. And you're going to use your 10K account as your master account for when you buy another challenge. You're going to set up a trade copier. And I'll show you how to do that when we get there. We will use this 10K account because your brain is used to trading on 10K. Your brain isn't used to trading on 100K or 400K. Your brain is used to trading on 10K. And so watching price move up $50 or $100 feels, it just psychologically will help you managing this entire asset fund under management with this tiny 10K account. It's going to help you mentally and emotionally, I promise. Okay. Beeswax says you might have went into further detail on it at another time, but you mentioned not looking lower than 5 minutes. What's your reasoning? Mostly it's just that I want to see a higher time frame. Now, yeah, I just want to see the higher time frames play out. I have become, for me, in this system that I use, I want to see the setups on the higher time frames. They're cleaner, and they probabilistically have played out more consistently in my favor than anything below a 5-minute time frame. That's my reasoning. So I will use a 5-minute time frame for an entry and sometimes confirmation, but definitely for entries to get good, clean stop loss placement, and to get a shorter 1 to 2. But I like the 15-minute is probably my golden zone, but I'll use the 5-minute. We used it last week. If you were here last week, we used the 5-minute a couple times for confirmation and for entry. So this, if you're watching, you can see this little area of consolidation that we're in right now after this run up on a 1-minute time frame is lots of liquidity. And what messes people up when they drop down here, you see all this liquidity built up on the 1-minute time frame, and you're like, ooh, I want to see that grabbed. We go run higher. Well, the higher time frames, they have a lot of inefficient price action down here. And so if you're just anticipating a 1-minute grab of this liquidity here, and then you see some kind of displacement back up and you're like, ooh, I'm getting long, that's when you get slapped, because price still needs to reach back down here into a discount level. It doesn't have to. It could just use this 1-minute liquidity, but I don't use it because it's not high probability. When the higher time frame says there's still room down here that only buy side was offered. So I want to use the higher time frames to frame the trade setup, and then use those lower time frames to see where a situation like this might develop on like a 5-minute time frame for an entry. So that's why I don't like to go below. If on the 5-minute time frame we just do this all morning, and then this afternoon you get a dip down into here with displacement, I would be fine. But we're going to need to see quite a bit of liquidity engineered to set up a run into these areas. Let's we're on the pound. Let's look at the euro here. So you're getting some engineering of liquidity here. So you're getting some relative equal lows. You can see that on the 5-minute. When we drop down, it's going to be a little bit clearer. You've got a trend line developing, but you can see this is why. This just looks so pretty. So pretty. It has grabbed liquidity all up here. It still has some buy-side liquidity up here. And then you've got all of this up here, relative equal high still. And you've got this weekly volume imbalance above it that will be interesting to see what happens when we get up here. Will this volume imbalance that we have traded through now act as, it was the initial sell side liquidity, now it's going to act as buy side liquidity, and will that act as traditional resistance for price when we get up there? I don't know. The other reason we have to be really nimble right now in the markets is because of all the debt ceiling stuff that's going on with the U.S. You've got news coming out this week. You've got the debt ceiling talks that are going to be put to a vote, and who knows if it's actually going to pass. Just because they've agreed on anything doesn't mean it's actually going to pass. So any hint of it not passing, it's going to create a lot of volatility, and you're going to see the dollar rally hard again if there's any anticipation of that thing not passing. So we're going to be nimble. We're going to be quick. That's why 1 to 2, we can be quick in and out of the markets in about an hour or less every time. And then it doesn't matter what happens after that. We'll come back and watch and wait for another setup. If Eurodollar sweeps the previous day high here and gives a short setup, would you consider taking that, or are you only looking for longs today? I'm more bullish. I said earlier on in the stream this morning, I am short-term bullish dollar for the next 24 to 48 hours. So I would only be trading in line with my bias. That's not to say there won't be a golden opportunity for a short setup. I don't take counter trend trades. I don't try to anticipate that price is going to come back down here, because it does not have to. It can just run away. This, in ICT terms, would be a low resistance liquidity run. It's just running hard, and it doesn't ever turn around and give you a pause. It will come back at some point. But I'm only going to trade in line with my bias. And so that is, and the reason I am short-term bearish on the dollar, bullish on the foreigns, would be we're approaching the end of the month. When you're anticipating the power of 3 with open, high, low, close, your monthly candle just put in the low of the month on the last couple days here. I don't anticipate it making a new lower low for the month of May in the next 24 to 48 hours. So I'm anticipating price, if price opened up here, way up here somewhere, it's now put in the low, and now it's going to put in the close somewhere back up in here in the next 24 to 48 hours. And then June will open, and we'll just have to go from there. But you have to think in terms of higher time frame, that this market, here's the monthly chart. Turn all this off. Here's your monthly chart. We had a break of structure. We've made a higher high. We've pulled back now in the month of May. So we had an open, a high. We put in a low today. I'm anticipating that being the low and holding for the next 48 hours, which means open, high, low, close. Close would be somewhere back up above the bottom, the low. So that is one of the main reasons I am slightly bullish on foreigns for the next 24 to 48 hours. You had this big rundown on the weekly. You've had 5 weeks in a row of bearish price action. You've reached into an optimal trade entry, into a fair value gap and volume imbalance. All of those things, we've reached our price objective. We hit that weekly volume imbalance right here this morning, and we've rejected higher. So yeah, bullish. Short term, until we break this high and get a close above this and change market structure on the daily time frame, I'm overall bearish. But that doesn't mean today and tomorrow I can reverse my bias in the short term. But you have to take into context everything that's going on to get that bias. And I'm only going to trade in the direction of my bias. We've had massive sell side liquidity run, massive displacement higher, breaker block, fair value gap. So it may take until tomorrow for this trade idea to play out. And that's where some of y'all get so screwed up. You're like, oh, I got to wait another 24 hours to trade? Hell yes, you do. You need to be patient. Stop trying to predict everything that's going to happen on a 15-minute or 5-minute or 1-minute time frame. This is why you keep getting chopped up. Move up to the higher time frames. It becomes so much clearer. Price moves slower and allows you to process easier. If you're new to this and you're failing challenges, you don't have the skill set to process a 1-minute time frame every single day. You're going to start convincing yourself of all kinds of stuff, and then you start pushing buttons, and then you blow accounts, and then you're back wondering why you suck at this. And you're wondering why everyone else can do it and you can't. This is why. Man, I really want to try to say your name, brother, but I'm just going to call you OT if that's okay. OT says, asides EU, which other pair do you like to trade? What you see on my screen. Well, you can't really see it because the text up here, but GU, I like trading GU. I use the dollar to help anticipate draws on liquidity. I trade gold, and I will use US30 as well. We're into the 8 o'clock hour. We're 3 minutes into the new hour. You've had hourly closes, extremely bullish. You've now had 5 straight hours. Well, really, if you consider that rejection here on the euro, you've had 1, 2, 3, 4, 5 straight hours now of bullish delivery. Only buy side being offered. It's leaving behind fair value gaps. And is that a volume imbalance right there on the hourly? No. I don't think so. But we're just going to wait and we're going to watch. You're watching the drawn liquidity here. We want to see that left in place on pound. If that is indeed going to run higher, then that's where our draw would be on this red line up here. This is a 15-minute breaker from last week or a couple weeks ago that has acted as resistance every time price has gotten up into it. It has engineered liquidity. I would expect that to be a significant draw for buy side liquidity here. It has some fair value gaps to fill in over here on this side. So I would expect a pause, maybe leaving that in place somewhere right here. You get a pullback, you reach for sell side before it runs that again on the pound. Gold, we're anticipating it's just running away. It's now pausing here after filling in this fair value gap completely and inside of this hourly order block. These relatively equal highs here on gold are within striking distance you would, for me, what I would want to see is leaving those in place, coming back, giving us. I would love to see it come back down this far. It may not. That's a big run up and not a lot. It doesn't have to come back down that far, but I would like to see some liquidity engineered here, and then grab that before we run for this buy side liquidity on gold in the next 48 hours. So anticipating all of those things. And until the dollar and the indexes stop moving in the same direction, I have no interest in trading US 30 right now. All right. This is it. This is what trading is, guys. I am not an entertainer. I don't got jokes. So what questions do you have? You can type them in there. Is there something you're seeing that I'm not? Is there a pair that you trade that I don't have up here and you would be like, hey, what do you see on this pair? I'm happy to look at other charts if you want me to. But this is all I'm using. And this is all you need. This is all you need. A couple of pairs. There's 4 pairs up here. And I've already eliminated one US 30 from being in consideration. I've identified 2 areas, one on gold, one on euro, because they were cleaner looking to me than the pound, based on liquidity being grabbed. On the euro, we grabbed and made new lows. On the pound, we did not grab and make new lows. So that's why I would like to get involved more with euro or gold than either one. Now we just watch and wait. We just watch and wait. You have to fight that itch. Who's fighting the itch right now to take a trade? Anybody? Anybody sitting out there like, oh, I want to trade so bad. Look at this setup on the 5-minute time frame. Look at this setup on the 1-minute time frame. I want to take this trade so bad. Anybody? You got to fight that itch, man. That is not going to be helpful for you. Next draw on liquidity here, 15-minute time frame, is right here and right here. This would be your larger term draw on liquidity, but you got kind of relative equal highs right here. This little swing high took out some liquidity above this swing high, but we've really had no pullback, even on like as low as 30 minutes. We've had no pullback. So we'll see. We got about 15-20 minutes until the New York market opens here for indexes and stuff and such. So we'll see. There's no news today anywhere that I'm aware of. It's a very light news day. So we could read 10 minutes ago. Yen firms on policymaker meeting. Dollar swings after debt deal. Now, there's only a debt deal on paper, and that's why the market is reacting. Oh, good news, we've got a debt deal. The debt deal hasn't passed, and so later today, when all of the Congress people start speaking out saying, I'm not going to vote for this, it's going to cause turmoil, and that is going to create a reversal into our area. 27 minutes ago, U.S. dollar declines early Tuesday. Eyes on Friday unemployment report, or Friday employment report. Euro little changed as traders await key CPI data. So we got a lot of news this week. Debt ceiling, employment, CPI. On tomorrow at 10, you've got the job openings for the euro. You've got unemployment rate this week, and you've got the inflation rate year over year. So they're anticipating the unemployment rate to be unchanged from the previous, and they're anticipating inflation to actually drop more than 0.5% from the year over year. So that'll be some volatility in the London session Thursday. And then on Thursday morning, we've got PMI for manufacturing. And then Friday, we've got non-farm payrolls. Woo, NFP, baby. So a lot of volatility going to be coming in the next 4 days. You've got a month closing. You've got a month opening. You've got debt ceiling. You've got red folder news. So we're going to get some movement here. We're going to get some movement. Oh. For all the new viewers in the last couple days, where did you, how did you find this channel? Was it on Twitter? Was it on YouTube? I would be interested to know how you got here and found this. Twitter? There's one Twitter. No, I don't. Well, I don't trade going into NFP. No. I'll trade NFP after, because often NFP will produce a run on liquidity and displacement away. And so you can trade after NFP, but you don't trade actual before trying to guess NFP. Couple Twitters, couple YouTube. YouTube was in my feed. Cool. Entry criteria. Yeah, we can go over entry criteria. Entry criteria is, well, let's just let me just type this out. So first thing I need to see is I need to see a run of liquidity. And if you're bullish like we are currently, or at least the way I am currently, I want to see a run on sell side liquidity, which we did. 2, I want to see displacement in opposite direction of liquidity grab. 3, I want to see price leave a, typing in front of people is my nemesis. Leave a fair value gap inside or close to a breaker block. 4, and that could be on a 15-minute or a 5-minute time frame. It could be 1 hour, it could be 30 minutes, but I typically try to get my entries around the 15-minute or 5-minute time frame, and so I'll be looking for fair value gaps and breaker blocks inside of that area after price has moved in the opposite direction. And then entry, so entry is I don't like just enter at the fair value gap. I will try to identify a place where my stop, entry, I'll just type this out. Entry at fair value gap or 50% of breaker, or 50% of fair value gap. I mean, it's somewhere inside of that fair value gap. I want to see it get in there. And oftentimes that's at 50% or deeper into the breaker block sometimes. Stop is below breaker at a minimum, breaker block or candle that created the fair value gap. And my TP is 1 to 2.1 or 2. I want a true 1 to 2, so to cover my commissions and spreads, I go a little bit beyond 1 to 2 straight up. I go like 1 to 2.1. And we move to break even at 1.5 R. So when prices moved in our favor 1.5 R, we will move to break even. We don't move to break even until that happens. We will let our trade play out and hit either a stop loss, it will move to break even, or it will hit take profit. Those are the three outcomes. The only three outcomes in this system: a stop loss, a break even, or a take profit. So there you go. That is that's how we trade right here. That's the whole. That will get us $2 million in funding. That's it. Do you have a list of rules for your entry criteria? There they are. Found yesterday on Twitter. Cool, Michael. Glad you're here. So it looks like Twitter is kind of the main thing. YouTube is very small right now. Like, I've got almost 250 followers now on Twitter, and I've only got just over 100 subscribers on YouTube. And only about 10 people watching. Nope, no partials. Not in this system. I do have other trading systems that I use on funded accounts, but I'm not going to confuse you guys on that. That's for later on when you're consistently profitable and you want to try to expand the tools inside of your tool bag as a trader. You just need to master the wrench right now. You don't need to be going for sockets and pliers and wire strippers and I don't even know what other tools are called. You just need to master the wrench, okay? One simple tool. This is all you need. You don't need anything else in your trading career. You just need to master one concept, one A+ setup that you will not take unless it is absolutely clearly right there. So that's this concept. I will take partials in other concepts, but not in this one. And don't ask me about the other system. I'm not going to talk about it. I'm not going to get into it. It does not matter anything with what we're doing right here. The only thing that matters right here is this low-hanging fruit. How to spot and find low-hanging fruit every day. Reach into the market. Just pluck it right off the tree and eat. And then do it again the next day or the day after. There's no reason to try to climb to the top of the tree and get the fruit at the top of the tree. It tastes the exact same as the fruit at the bottom of the tree. There's no reason to put that risk on yourself of not being able to get there and grab it when you can just reach up and grab it and be done. This is all you need to be profitable. This is all you need to get $2 million in funding. This is all you need to make 3 to 5% consistently in a payout. and change your family's legacy. That's why we're doing all this. Yeah, I mean, I'm not doing this to blow up. That's honestly not why I'm doing it. I think that if I can show credibility, and I have so far, and I can continue to have proof of concept on this is how you do this, and I think there are going to be a lot of traders who would be interested in being like, oh, I see. Now I know why I'm sucking at this. And now I know this is how I can actually fix it. I wish I would have had something like this when I started 4.5 years ago. Everybody wants to go out and pay all this money for education and strategies and books and courses and private communities, but 9 times out of 10, these private communities, there's no one sitting here every day at the market watching and waiting as price evolves right in front of your eyes. No one's sitting there on camera coaching you through the psychology of don't push the damn button, just wait. No one was doing that, and no one is that I know of is doing this on YouTube for free right now. I mean, there's a couple guys. I don't know if you guys follow Donovan. He trades gold with a couple dudes. He doesn't use this system, but I mean, there are streamers out there that are streaming live on Forex, but none of them are doing this. None of them are documenting and showing traders how to start with a small challenge, with a very little monetary investment, and use that to snowball into a max funded account that can actually produce life-changing results for you. So hopefully people will catch on and watch and want to watch and be a part of this. So I'm not selling anything. I really do just wish that I was like, man, what would traders need right now? What would I have wanted back then? What would have helped me? This. Okay, well, I can do this. I don't have to. I'm going to be doing this every day anyway. This is what I do every day. I wake up and this is what I do every day. Why not just let people watch and get value out of it, and hopefully move some people along in their trading careers in the process. So Ramen says I blew out a prop account 3 days ago. So sorry, bro. This week I will go for another 100K to trade here with Altogether. Just get a 10K, man. Just get a 10K. Don't get a 100K. You just blew one. Get a 10K, go through the process. If you have the money to buy a 100K account, then you have the money to buy 3 or 4 10K accounts probably. So buy a 10K, split that money that you were going to spend on a 100K account, divide it by however much a 10K account costs. And let's say you could buy 4 10K accounts. And with discounts going on right now, it may be even more than that. But let's say you could buy 4. You now have 4 opportunities to get funded instead of 1. And you just blew a prop account three days ago. So buy a 10K, 1 10K, keep the rest of that powder dry. Okay. You have 4 bullets with gunpowder in now to shoot instead of buying 100K. Buy a 10K. You're 1 bullet down. You've got 3 more bullets. So if this 10K, you blow that 10K, you can go back in and do it again. You only need a 10K account to start this with. And if you can pass a 10K and get funded, then you can use those profits to buy more. don't don't go buy 100K if you just blew one. Don't do that. That's my advice from having done the same thing that you're doing. Okay, from blowing it and within 10 minutes going in and purchasing more accounts after blowing it. I have done that so many times. Don't do it. This is coach to player. I'm coaching you. Here's the way you should do this. If you have the funds to buy a 400K account, divide that up and buy into 50K accounts. If you have the funds to pay for a 100K account, divide that up into how many 10K accounts you can buy. If you only have enough to buy one 10K account, maybe you don't need to buy that 10K account and you just need to watch and work and save up until you have enough to pay for 2 or 3 10K accounts. You want to give yourself a trading balance, right? You want to have this little treasure chest of trading funds. And if inside that trading fund, you take all of the trading fund to buy a 100K account, you've put all your eggs in one basket. And you're not ready for that yet. Okay? You're not ready for that. You need to protect that trading fund. And instead of putting all, let's say you have $1,000 that you're willing to put at risk in these prop firm challenges. You need to take that $1,000 and protect it just like you would protect your capital when you take a trade position. Instead of taking that $1,000 and putting it into a brokerage account, you're taking that $1,000 and you're putting it into prop firm challenges. And so you need to divide that treasure chest of your trading funds up. You need to divide that out and give yourself a number of bullets, so to speak, that you have to shoot to try to take it down. So buy the 10K account, past the 10K account, you still have these funds over here that you can then purchase another 10K account and keep building. And then when you're consistent, then when you're profitable, you reinvest those profits back into your business and you can buy larger challenges. But keep those small accounts, keep those payouts coming. You can build up your little treasure chest of your trading fund. You can use those profits to reinvest in your business and keep buying challenges. Man, it's just the way that you need to, it's the smarter way to think about your trading business, okay? Stop trying to think, I'm going to do this all in this next challenge that I'm going to buy. I hear my dogs coming down the stairs. I've got 2 golden doodles, and it's time for them to do their business outside. And to get to the back door, they have to go through my office to get there. So I'm going to just pause real quick. I'm going to turn the camera and the mic off so I can let them out and do their business. Don't go anywhere. I'll just be like 2 minutes. So give me just a minute, guys. Bear with me. I'll be right back. All right, we're back. I've had a little bit pullback here in the first 30 minute of the New York session. We're coming into that New York Open now. We'll watch and wait and see. Does it give us a pullback? Does it give us some kind of dip back down into this range? And if it does, we'll just have to watch and see what happens. Gold is leaving those relative equal highs in place, reacting off of this order block over here. Inside, filling in this full fair value gap now. And it's starting to pull back. So we're going to need to watch that until we get back into a discount area of this massive run up. We have no interest in getting involved just yet. We want to see what kind of liquidity is getting engineered down here on lower time frames. Are there clear equal lows? There are here and here inside fair value gaps, and so we would anticipate price wanting to make a run on some of that. It doesn't have to get all the way back down here. I would prefer it, but if we see a run on liquidity and then we get displacement higher, we could potentially find entries ahead of that. Same on Euro here. We're getting a buildup of sell-side liquidity on this trend line. This is what retail would be trading if they are looking at lower time frames, but you're going to want to see price redistribute back down, and you can see the biggest fair value gap that we have is down in here. And there are people that are going to be like, well, why aren't you just trading short right now? Why aren't you trying to get in and trade off the fair value gap and the structure change on the 5-minute time frame? Well, because we don't know that price is done running higher. And because I'm bullish, I don't want to trade against my daily bias. My daily bias could be wrong. And it is sometimes. But that's why I don't take trades every day. So we just opened into that 8:30 opening. You're getting a little bit of a just bounce around right here. You've had a structure shift. This is what I was talking about. You've had a structure shift right here. And people are like, oh, look at that fair value gap right here. That's going to send us lower. And it might, but I'm not going to trade off of that. That's not a high probability setup, because it could just grab a little liquidity here and then run for new highs for the day. And I don't want to buy high. I want to buy low. That's where your high probability setups are. So that's what we're waiting on, and that's what we're watching for. Sam says, blown 8 prop firm accounts over the last 6 months. I feel your pain, brother. It is a long and lonely journey to get to where you can pass these challenges. You get sold on the dream of life-changing money, and then you just try to rush the process, and you try to prove everybody wrong, and you try to prove to yourself that you can do it, and all of that ends up working against you in the long term to actually doing what you have to do every day when you sit down to charts. We only want to put our money into high probability setups that give us a quick 1 to 2 risk reward. And with my winning percentage, that's all I need. And I'm happy with that. I do not need to get greedy. I don't need to try to hit 1 to 5s, 1 to 10s. Again, that's like trying to climb the apple tree and get the apple that's at the top of the tree when there's 10 apples at the bottom of the tree hanging down that all you have to do is reach up and grab them. So we wait. Yeah, man, I know what it's like to blow prop firm challenges. I know what it's like. It sucks. It sucks. You work and you save up money to buy a challenge, and then you blow it. And then you work and save up money to buy a challenge, and then you blow it. And then you work and save up money to buy a challenge, and then you blow it. And like you said, 8 accounts in 6 months. I failed over 30, so I know exactly how you feel, man. I know exactly how you feel. So hopefully we can do this together, and hopefully you can learn to figure out what the bad habits are that are leading that to be a continued thing in your trading career right now, and we can get rid of those and replace them with good habits. It really is all about mindset and mastering yourself more than it is about mastering the markets. Everybody wants to know the entry strategy. Everyone wants to know the exit strategy. Everyone wants to know, when do you get in, when do you get out? And no one wants to just be patient. Gold giving us a nice retracement here. You got a draw on liquidity here and here, and then you've got this fair value gap inside. It does not have to come all the way back down inside here. This is just the area that I anticipated off of this breaker, and it's into a discount. So, and it may not do that today. You look, I mean, it took 5 or 6 hours to get up there. It may take the rest of the trading session today to engineer liquidity so that tomorrow you get a dip down and your setup shows up tomorrow. That's what hunting is all about. Sometimes you go out and you're stalking and you realize, I'm not going to get a trade today, but I know where he's going to be tomorrow, and I'm going to set myself up to get him tomorrow. I would rather win 2 in a row this week and only take 2 trades than win 2 total but have lost 5 because I took a trade every day. Give me the 2 straight winners over the 2 winners and the 5 losers every week, without a doubt, without a question. You can see the liquidity that the market is engineering here with these relative equal lows in a couple places and in line with fair value gaps below. So you would anticipate, again, I would anticipate, what I want to see is price come back down into a discount from this big push up. I want to see price come back down into a discount area, reprice and rebalance some of these inefficiencies it's left behind. There is a little volume imbalance here on the 15-minute time frame right here. That's a little volume imbalance that will act as a draw on liquidity. Price will want to rebalance that. You have a no wick candle on the 15-minute time frame here. You have a no wick candle on the 15-minute time frame here. So I really want to see, as price retraces and provides an opportunity for sell side, what happens around this area. And I've got my alerts set on gold and euro. Now we wait and watch. And typically, if I wasn't streaming, I would be done. I would be finished. I would close my chart. I have set up, I've read and analyzed. I've figured out what my bias is going to be for the next 24 to 48 hours. I'm bearish on the dollar, bullish on the foreigns. That's a short-term bias that I'm holding. More neutral than anything overall. Now that price has reached its overall objectives that we laid out. We laid out this area yesterday, extremely clearly. We said price was going to be drawn down into this volume imbalance. Overnight in London, it did that. And so that's what we do. We analyze charts, we get our bias. Then we identify, was there, number one, a run of liquidity? Yes. Was there displacement in the opposite direction of liquidity? Yes. Did it leave a fair value gap inside or close to a breaker block? Yes. Did we get an entry at the fair value gap or 50% of the breaker or 50% of the fair value gap? Not yet. So we're here at number 4. It took 5 hours for 1 through 3 to develop. It may take another 5 hours for number 4 to develop, and then it may take about 15, 20 minutes or an hour for it to play out. Man, I gotta sneeze. This is trading. So I would have, if I wasn't streaming, if this was just how I normally trade before I started this channel, I'd be done for the day. I would check my chart maybe every hour or so on my phone just to see what was going on. But if my alerts don't go off, there's nothing for me to do. And so I know I'll be back tomorrow, and I'm going to enjoy watching the ocean roll in and out. Just walking on the beach and watching the ocean, the beautiful ocean, create all these candles and waves of price. It's fascinating. And you should learn and cultivate the joy of watching candles print without doing anything. It will do more for your trading. It will do more for your mindset and your emotions of just becoming a lover and enjoyer of how the market moves. Because it really is just a beautiful, symmetrical thing. Need to drop the playlist. We're back at it. The playlist, man. I need a new one. I need to figure out how to get a playlist that isn't the same one. Like, I built this playlist off of the YouTube music, the free music, so that it's not getting copyright infringement and all this other kind of stuff. And Streamlabs OBS, which is the software that I'm using to stream and get all the picture-in-picture and graphics and stuff on the screen, they offer this widget that I can attach to it that you can stream royalty-free music from inside Streamlabs. But every time I've tried to use it, it jacks up and it just like gets super stuttery and distorted and you can't hear anything. And so I've ditched that. I just went on, I downloaded a crap ton, like an hour and a half worth of YouTube tracks, put them all together into one long MP3, and then it just loops this MP3. And so I either need to make a new playlist, I need to, or find a way that there's playlists that can just play that are more varied than what it is. So we're getting into the loop, and it's like, okay, it's done. We can turn it off. It's fine. We don't need it. We can just kill that thing. But then it's just awkward silence and there's nothing else going on. So, whatever. What's your thought on indices compared to currencies? Yeah, well, until, like I said, Ramen, earlier in the stream, until currencies, well, and still until the dollar and the indexes stop moving together, I don't really have interest in trading the indices. Right now, they're moving. When the dollar's moving down, the index is moving down. Right now, you've had a retracement off of the dollar, and you probably have the indexes haven't done anything. They're just sitting around doing nothing. So I just want to see them split away and move apart from each other. And until they do, I don't really want to. The foreigns are trending, and they're creating beautiful price action. So that's why currencies and gold are just easier to trade right now. They're just giving you way more clean setups than the indices are. So staying away from US 30 right now, focusing on gold, euro, and pound. The dollar has left aside these relative equal lows and sell side liquidity, creating another semi-relative equal lows. So it's just engineering liquidity here. So I would definitely anticipate the dollar reaching below into here somewhere before it starts turning bullish again, if it's going to turn bullish. For our trades to play out, we do need to see a slight pullback up into here before it hits that drawn liquidity. So it's fine pulling back right now. What it's doing, you can see the imbalances up here, only sell side delivery. This could be your 1 hour breaker right here. This is the move that created and took out liquidity and then displaced back below, leaving fair value gaps inside. So you could anticipate the dollar coming back up at least to this level, and I would want to see it dip into this level before it tried to run these relative equal lows here. And again, that lines up with our euro, dollar, and gold setup as well. So just being patient and just watching. Get back to euro here. It's got all of our text here on the screen. One trade per day. Yep. If I'm going to take a trade, it will be one per day. Because I have a 2% daily loss limit. That's on this. For this system, I have allow myself to lose a maximum of 2% per trade. That's one trade. And if I win, I'm done. I'm not going to try and get back in the market. I'm not going to try and find, my setups take time to develop. These A+ setups, these trophy bucks we're trying to take down, they don't just show up every day. And so when you find one, you take it down and then you go enjoy the rest of your day. You enjoy that win. It feels good when you win. It feels good when you take money out of the market. So just let it go, and then you come back the next day and you see if you find another one. How many setups usually you have in 1 month? Well, we took 10 trades in phase 1 and phase 2 total. 10 trades. And that was 13 trading days. So if you move that out to 20 trading days in a month, you're probably looking at somewhere between 10 to 15 trades a month. Last week was really unique. We had a trade set up every single day last week. Every single day. And that is rare. Like that, it is very rare that every day I'm calling a trade. But that did happen last week. The first 3 were all break-even trades, and then the last 2 are winners. So that's, yeah, I mean, I don't take a lot of trades, and you shouldn't be taking a lot of trades. If you're not passing challenges, the answer is not to take more trades. That's the reason you're failing, is because you're taking too many trades. So we're not going to take that many. Coming into the 9 o'clock hour, coming up on 2 hours on our stream here. I will stay on probably for another 30 minutes or so, and then I need to go get on about my day, because I mean, the market is just going to do what it's going to do, and I don't need to sit here and watch all of this. I've identified exactly where I want to see price get to and what I want to see it do. And if we get off the stream and there's a valid trade setup that appears, I will post all of that on Twitter. So if you're not following me on Twitter, definitely follow me at Venator Trading on Twitter. I post everything that happens there if I'm not on the stream. And if I'm on the stream, I'll take screenshots and I'll post it there here live on the stream as well. Because I know not everybody can be watching the stream right now, but yeah, let's see what else. We got a few more comments down here. With Euro red folder news marked as all day tomorrow, how do you manage trading around that? Best to sit out, or how does that work? Yeah, so tomorrow we have red folder news at 10 a.m. If there is a setup that forms and I can be out of it before that red folder news, I'll take it. Otherwise, I would wait until after the news hits before I look for any positions. The red folder news days are good days to trade in that they often provide the energy that you need to see for price to either grab liquidity and displace, or price has already grabbed liquidity and then the news provides the displacement that creates your fair value gaps and breaker blocks. So trading after red folder news, you can find some good setups, but definitely not leading into red folder news. No. Xanax, hey man, bumped into via Twitter. Appreciate the value and honesty you bring into your streams. Thanks, man. Appreciate the subscription. Keep following along. Hopefully you can learn with all of us here as we tackle these prop firm challenges together. $18 watching now. Sheesh. Is it 18? Mine says 14. It goes up and down, and I don't keep up with the how many people are on here. But 18, that's cool. That's a good hang. You know, that's a nice little kickback. Corey and Muhammad, I don't know if Muhammad's still in here. He was in here earlier. Corey and Muhammad, man, they're my OGs. They were day oneers. Actually, they're not day oneers, but they were here before any of y'all were, and they were here every day before any of y'all were. So those are my boys. Corey just had a birthday. I think it was yesterday, in fact. So one day into year 20. I guess it's weird, though, birthdays. Like, you turn 20 means you finished your year 20. So you're actually one day into year 21, technically. You gotta get all 365 in to get to 21, but you're one day into 21. So congratulations, man. I hope you had a good birthday yesterday. Would you mind checking GJ? Took previous day high and is giving fair value gap breaker. Yeah, we'll look at GJ here. Euro's coming down nicely, giving us a good retrace. So we're just going to hang out in the next maybe 20, 30 minutes. It might come back down into our area. I wonder what's gold doing. Gold is not moving like Euro is. Which time frame are you using for analysis? I use the daily time frame to understand what's happening in the larger time frame. I will look at the monthly, and I'm aware of what's happening on the weekly time frames. Those are definitely play into overall bearish and bullish biasness. But now that I have identified for the next 24 to 48 hours, I am bearish on the dollar, which means I am bullish on foreign currencies that are correlated to the dollar. We're coming into the end of the month of May, and so we're anticipating a low of the month being put in here. We're not anticipating a new low of the month. Now, that can happen. It can certainly just tank and make a new low of the month, especially with red folder news coming out tomorrow. You've got the debt ceiling limit stuff floating around out in the newsland. So it could certainly make a new low. My analysis says that we're probably making a low here, and then today or tomorrow we're going to close back up in here to give a low, open, high, low close for the month. And so that's why I am short-term bullish on euro and pound right now. So we're just waiting for a pullback after this displacement from a sell-side liquidity grab. 21 viewers at one point earlier. Really? That's cool. I'm down with that. All right, we're getting a push here from the hourly candle here. We're coming into an hourly close in the next 5 minutes. You can see a nice pullback now after this big run up. So you had sell side liquidity grab, displacement, breaker block, fair value gap, and we're getting our retrace now back down in towards a discount level. It doesn't have to get all the way down there. It can turn around anytime now. It's reaching fair value gaps. It's reaching higher time frame order blocks. So as it approaches these PD arrays, we just watch and wait. We just watch and wait. This is the bare minimum. This orange box is kind of the bare minimum place that I'm going to be looking for something. And by something, I mean I want to see price come in and react. I'm not just going to enter here. I'm not just going to enter here. And we'll talk it all out when price gets there. All right. Hate to ask again. Oh yeah, GJ. Sorry about that, Jack. Let me get over there. And I'm going to use the ACAT feed. All right, so just a quick dirty analysis here on GJ. If you look at our weekly time frame, we have just taken out sell side liquidity here last week, and we're making new highs. You've left behind a volume imbalance down here on the weekly time frame. We're at the end of the month, so we need to be aware of what the monthly is doing. The monthly is probably trying to reach up into this monthly fair value gap right here. And it doesn't have to do it today or tomorrow. We're about to close out the month, and because of that, you would anticipate the monthly candle is likely to leave some kind of wick. So is the wick today, is in the rest of the day and tomorrow, just going to consolidate? Is it going to close at the very top and not leave a wick? Like last month, it didn't leave hardly any wick at all. But you can see, in general, price typically wants to leave wicks on the top and the bottom of these candles as they print. So as I'm approaching the end of the month, I'm thinking about that. The weekly time frame, we've had 3 weeks straight running up. We've taken out last week's high. On the daily time frame, we've taken out yesterday's high. We've taken out Friday's high. We have a fair value gap below. We're starting to see a pullback after taking out those highs there. The 4 hour is showing rejection. It closes in 1 minute, so we've got a run of liquidity. You have relative equal lows for your right here. So that's going to be your first sell side liquidity draw. You've got more down here. These are all very clean levels that are offering, that are going to be very juicy as the month opens. I would anticipate these levels, if they don't get hit today or tomorrow, I would think as June opens, some of this gets attacked. But we'll have to wait and see on that. On the 1 hour, you've had a run of buy side liquidity right here. So buy side liquidity has been run, and you've had, it looks like, some displacement back below. An aggressive move back into after running buy side liquidity. So here's just because you have buy side liquidity run and you have taken out previous day's high, you have to determine, Jack, what is your bias? Because if you're in an uptrend, which if we zoom out, we're clearly in an uptrend. So unless you have something that says my bias is bearish, my bias is to sell short. If that's you, then yeah, you're getting a run of liquidity. You're getting some displacement back in. I don't see anything on the 30-minute time frame. There's no breaker blocks. There's no fair value gaps. 15-minute, no breaker blocks, no fair value gaps. 5-minute, no breaker blocks, no fair value gaps. I would want to see, for me, if I was bearish, this candle right here, this down close candle on the 15-minute time frame would have to be displaced through. I would need to see energetic displacement back through this. You've had energetic displacement into buy side liquidity, but you have not had energetic displacement back below this to create a breaker block right here. This candle right here, if you're bearish, would have to be what you would be looking for, the very first sign that you would be looking for that you would want to go short. You would want to see this kind of energy right here. You would want to see it trade that aggressively back through there. And you would want to see it leave behind a fair value gap. And you would also want to see it not take out this sell side liquidity before it gave you an entry, then to take out that sell side liquidity. For me, I'm looking at this, and this looks like a bullish trend to me. Like everything's moving from the left, bottom left, to the upper right of the screen. This is a trend. So I would be looking for an aggressive run of sell side liquidity here, or potentially down in here, or even way down here on the higher time frame. But I would be looking for some sell side liquidity to get run with displacement higher and capitalize on the bullish trend going ahead. But like I said, we're at the end of the month, so it could be that things are going to stagnate here. It could be that the trend is just going to die out until the new month appears, and then we get a new trend in June forming. So again, I don't trade GJ. That's just looking at the charts and telling you what I see. My opinion only. If you want to trade GJ, you're going to have to determine what your bias is, and then you're going to want to look for sell side or buy side. You want to see the opposite liquidity get run of your bias. That's what you want. So if you're bullish, you want to see sell side liquidity get run before you begin to think about trying to find a trade that is moving in line with your bias. Okay. Hope that helped. Quick and dirty. Breaker on the 5-minute. On the GJ? No. No. That's not a breaker. It's already run liquidity. Your breaker needs to happen before the liquidity gets run. You just had 50, especially on the 15-minute. I would be looking for I would have wanted, if one of these 15-minute candles was bearish, that could have been a breaker. You could use that as a breaker, but I would not use one of these 5-minute candles as a break. I mean, I wouldn't, Jack. I would not do that. But if you have data that says, "Oh, I've got enough data that says, oh no, that's a 5-minute breaker for me." Cool. This is where the run started, down here. This run up into this liquidity, it started down here. This was just an extra little dive up into it. I'm not saying that these fair value gaps won't hold. They might. And push you lower, but why would I don't know that I would be super bearish on pound right now. If we're going to continue a bullish uptrend, which we've been in on the pound yen, this is just a displacement to make a new high. And yes, it did grab liquidity, but now it's just rebalancing some of this to potentially move higher if you're going to continue with that bullish trend. So yeah, that's not, for me, Jack, that's not a 5-minute breaker. I would be looking at this 15-minute candle at the earliest being displaced below as a breaker. None of this stuff up here. Now, ICT may pop into this stream and listen to that and go, Brad doesn't know what the hell he's talking about. And cool. By the way, if anybody can get ICT to pop into this stream, that would be freaking awesome. You want to talk about a pop off? That'd be a pop off. But I'm not here to get his validation. I'm not here to get his approval. I use his concepts, and these are the way I use his concepts, and this is how I'm profitable. So I would not be the trader I am without him. He liked one of my tweets the other day. If I could get him to retweet one of my tweets, man, that would pop off. But again, it's kind of a two-edged sword with ICT because ICT people are rabid ICT protectors, and they all think they understand and know exactly how to trade his concepts, and very few actually do. And I'm not claiming that I do. I'm just telling you, going through his 2022 mentorship and pulling out the fair value gap and the breaker block, that's the only thing you need to master, and you can change your life. You don't need 5 different ICT strategies. He's got, I don't know, 50 different strategies that he constantly is talking about. And that's just going to confuse the hell out of you. Just find one. Just find one and master it. EU dropping, baby. Let's go. Getting close. We've taken out some sell side liquidity here on EU. So look, here's where I would potentially use a breaker. That if price doesn't reach where I want it to reach and it starts displacing away without giving me an entry, I can walk away and I can be fine with that. But if price displaces, so we just entered this new 1 hour candle, right? So we have multiple things to look at. We're still anticipating price to come back down into a discount level here. So because of that, I'm not interested in getting in a trade on the buy side just yet. However, if we get displacement above these 5-minute candles, those would be 5-minute breaker blocks, and we could potentially use those as a trade setup long into this a retest of this weekly volume imbalance and these highs back up over here. Why would I say that? Well, what do we need? Where's my text? Here's my text. What do we need? Gosh, sorry guys. We need to see a run of liquidity. We've had engineered liquidity. Okay, we need to see run of liquidity. Then we need to see displacement after liquidity has been run. We're starting to get that. So you've had this aggressive move down. See this aggressive move down into liquidity? So you've had this big run up. It's starting to stall. Then you get this aggressive move down as it reprices. If we get a continued aggressive move up and we get a big candle closure above here that creates a fair value gap, you could potentially use that as a trade setup to go long and get your 1 to 2. Maybe. Price is leaving these relative equal lows down here though on the 5-minute time frame. So all of this right here, relative equal lows. That's engineered liquidity. So I would still anticipate some kind of movement back into that liquidity area, which would bring us down into this larger fair value gap here and closer to a discount. But we'll just watch and wait here for a little bit. I'm gonna give this another 15 minutes or so, guys, and then I've got to get off. What's up, Spider? Welcome back in, man. Yeah, he's done a couple of those student interviews, but it's typically with guys that have gotten like high 5-figure payouts, and we're not there yet. That's fine. I'm not chasing ICT clout. It would be cool for the channel for him to show up one day. There's been a couple people that he's randomly been like, hey, I'm watching this guy. And then these people have like me, like 10, 12, 13, 14 people watching. And then ICT tweets out that he's watching them. And then there's 3,000 people in the stream in about 10 minutes. Remember what I said about no wick candles? Right here. Bam. It does not like to leave behind no wick candles. That's why this one is still, and this one down here, these two no wick 15-minute candles, they're not great. Continue to see displacement away after you've taken out sell side liquidity, all of the sell side liquidity from the run up. Price does not have to reach this deep. My preference would be that it does, but we have had a run of liquidity. And we're starting to see displacement away from that. These relative equal lows are giving me a caution flag, I guess, so to speak, in my mind. This would be a caution flag of, hey, we may not be done on the downside just yet. We have a small fair value gap, a big fair value gap. We've got an order block, and we've got a breaker block. All of that is lined up down here. That is your beautiful, pretty setup right down here. So, but again, price does not have to do what you want it to do. It just moves the way it wants it to move. It doesn't know, it doesn't even know I'm sitting here watching it. It doesn't even know I exist. This is a demo account. It's a funded account, but it's a demo account. Okay. I'm going to mute the mic for just a minute here, guys. I've got to check a couple messages. I'll be right back. I'm not going anywhere. All right, sorry about that. Friend of mine gotten into a little bit of a fender bender there. I was just checking on him. So we got euro dollar has again. I don't know that I would. 15-minute candle closed. Reached back up into this order block. I've had to break a structure to the downside here. If price runs, be interested to see what happens at this fair value gap here. If it reaches up that high, if it violates that and gets a strong close, then this 5-minute would probably serve as a nice little breaker block here. But again, I still kind of have this feeling that price isn't done coming back into some of these lower areas here. It's left behind relative equal lows. So I'm not ready to just jump in bullish here and try to talk myself into a buy. So we're still just going to watch and wait. I've got about 10, 12 more minutes here, and then I'm going to have to head out. Anything that doesn't form right here on the stream, if something forms off stream, again, I will post it all on Twitter. If you go look at my Twitter and you scroll back through to last week, you can see exactly how I post those trade setups, screenshots, entries, take profits, stop losses, what I'm doing. I don't put my lot size in there. I use a trade assistant on my MT5 that I just drop lines where I want my limit orders to be. I put in what my risk is. In this case, it's $200. And then it auto calculates the lot size for me. So it's different every time. There's not a set lot size. It's all based on the position size is completely based on the size of the stop loss, which is how you should. That's how you actually trade. You don't just have a blanket lot size that you go in and trade with. So you can see price is reaching up into this 5-minute order block. Oh, sorry. Let me get off that. It's reaching up into this 5-minute order block here inside these fair value gaps, rebalancing. And unless we get displacement that looks like this, that looks like this move right here, this strong energetic displacement down, we want to see strong energetic displacement back above with big candles and high volume energy closing up above all that area. Then you might be able to use that as an area to potentially get long. I'm not telling you to get long. I'm not telling you that there's going to be a trade. I'm not being cryptic. Okay. What's gold doing? Gold reached down, grabbed some liquidity, and has moved away on the 15-minute time frame. It hasn't yet. It hasn't yet reached back into that fair value gap. Hey, Nan, welcome from Asia. Glad you're here. I think you were here yesterday, too. It's getting pretty late over there. My clock says it's almost 10:30 in Tokyo. I don't know what part of Asia you're from or what time it is, but I appreciate you spending your evening here checking this out. The fact that price is kind of stalling out here and we're not getting big, quick, energetic moves up above. I mean, this candle hasn't closed out. We have 3 minutes on this 5-minute candle. and you're starting to see a push here. If you get a big energetic push up here, this could be used as a 5-minute breaker block area. It's got a lot of fair value gaps down here, so stop placement would be interesting if this actually ends up being something. But again, I still feel this caution flag down here, so I'm not just ready yet to say this is a good setup. And we've waited 2.5 hours for this to develop. How many of you would have already taken 3 trades already today? You've got to be patient, guys. You've got to let price show you what it wants to do and where it wants to go. The New York Stock Exchange opens in about 8 minutes. And that's about all the time I'm going to have. And then I've got to get off to real life. Spider, can I please see the colors of your template? It's very soothing. Yeah, man. I'll pull those up here in a second. I love the dark screen. And I just like the blue up and the pink down. Let's see here. There you go. So my bullish candles are that blue, whatever that is. It's the brightest blue box, but it's the second one. My wicks are gray. And my it's like this light purple lavender-y color on the downside. I call it pink, but it's not pink. I guess it's more purplish, but it's kind of where we're at. That's where they are. My order blocks and fair value gaps, I use orange, and my breaker blocks are teal. Volume imbalances, I should have made this one. This was that. This should have been orange. Not teal. I use teal for my breaker blocks. Oh, the background. Where do I see the background? It's just dark mode. I don't know. Body borders, wicks. Appearance. Oh, here we go. Background. There you go. Third from the right. It's like a charcoal something. And my crosshairs are kind of grayish. Everything's just kind of muted, you know, just soft muted. It's easy on the eyes. I don't like super bright colors. I don't like harsh green or red. I don't like like stark black and white. But this is kind of this is the color scheme that, I don't know, it just feels good to me. It's a personal thing. Y'all can do whatever you want. It's how I like to see it. This is not a displacement close above that. If anybody's wondering, hey, that just broke structure and closed above. That's not displacement above. That's not an energetic move back above. Now, if the next one closes up again, big, and closes up in here somewhere, then I would be like, okay, well, now we're talking. But just having one little candle close up like that is not enough for me. We'll see what happens as the 9:30 market opens here. Do we just get a continuation from London and without any big significant pullback? I would have, again, my preference would have been to see this come into a larger discount area before we run this stuff up here. But that doesn't mean you just get no entry at all. There are still ways to, if price doesn't go exactly where you want, but it still grabs liquidity and you still get displacement, we can still get involved potentially. This is the overall drawn liquidity, these highs up here, and this volume imbalance. This was an old volume imbalance on the sell side. We've traded back through it, and I'm anticipating price to have a reaction from that up around that area. We're also at the end of the month, and so again, we're short-term bullish on euro dollar. That doesn't mean you're going to get to find the entry you want to capitalize on that move. Price could just consolidate the rest of the day today. And our setup, all of this setup could be tomorrow. If price just runs away here, I'm more inclined to do nothing than I am to do something. You have a no-wick candle forming on the 15-minute here, and you've got relative equal lows. We know that no-wick candles like to not be left behind. Any tips on how to develop this skill of staying patient for the setups to form and not get triggered by any market moves? Not being patient and greed cost me the most so far. Yeah, it's hard to be patient. Do I have any tips? Yeah, remind yourself how much it sucks when you're not patient. You got to tell yourself, that hurt. Let's not do that again. That was not fun. Let's stay away from that. That's my tip. That's how you develop patience. Developing patience is you have to be patient. It's like when you go to work out at the gym. How do you get stronger muscles? You lift weights. You're not going to get bigger muscles if you don't lift weights. You're not going to be and develop patience unless you choose to be patient. It is a choice to be patient. All right, this 30-minute candle is about to close. The NYSE is about to open here, so we'll see if we get any kind of, do we get a bigger push down here, a little bit of a deeper retracement, or are we just going to get volatility up? You can see we're not getting our displacement above that breaker block. These fair value gaps are holding. That 15-minute candle, that no wick is going to get tapped here pretty soon. And again, I'm anticipating a deeper discount, and I'm more inclined to not do anything, especially seeing that we couldn't get displacement above that area. I don't like that price came up here and then it reversed off of that area. You want to see energetic displacement, and it's very clear when you see it. Like this down here was very clear displacement. Grab, displace. It didn't look back. It broke new highs very aggressively. Okay. We did not break through and make new highs super aggressively yet on the euro dollar, especially on the 5-minute time frame. With these relative equal lows in place, no news coming out more today, and all of this buy side only really from London up. That's why I'm anticipating a deeper dive. I might be wrong. Time will tell. And I'm okay if I'm wrong. It doesn't bother me. It does not bother me to be wrong. I would rather be wrong than guess and get into a wrong position. I want my position to be what my position is. I want my analysis to play out the way I see it. And so far, we're seeing a pullback. Yeah. And there's just nothing juicy here for me to want to put my brand new funded account capital on the line. All right, guys, I have to get on with my day in my real life. So 2.5 hours is plenty of chart time, and we didn't get a setup yet, and that's okay. 2 days in, and no trades. And I'm perfectly okay with that. That doesn't bother me at all, and it shouldn't bother you either. Whatever itch and desire you feel inside of you about not being able to take a trade right now, embrace it and talk it through. Why do I feel that? Why do I feel that? And what's the worst that can happen if I don't take a trade today? My capital is protected, and I didn't miss anything because the market's going to be here tomorrow, and I'm going to wait for that A plus setup to get to exactly the way I want it to look. And they're going to come. I promise you they're going to come. The market will give you those A plus setups. So all that being said, Spider's leaving some stuff here real quick. There's a fair value gap and breaker on the 15-minute after they took liquidity yesterday's high. You're talking about this right here. Yeah, but my bias, Spider, is more bullish for the short term. For the next 24 to 48 hours, my bias is bullish. So yes, it did grab liquidity. Yes, technically that is a breaker, but I'm not, I don't have a short bias right now. Price has grabbed liquidity and filled in some of these imbalances and could easily just run higher as we close out the month. So I'm anticipating this is the wick of the monthly candle. You are not wrong in identifying that it did take yesterday's high and it has displaced back through that. You are correct. That is a correct analysis of what a breaker block looks like, but it's not in line with my bias. If you hold a bearish bias, then that could be a valid setup, and you could be targeting these lows and some of these liquidity gaps down there. It's not how I trade. Not telling you not to do that. I'm not telling you that you're wrong. I'm just telling you, a lot of this, if you just do what I do, I can't promise you you're going to be successful. I can't promise you anything. If you just do what I do, this is not how I would trade that. But you're your own traders. All of you are your own traders. You all have to decide what your bias is, and you have to decide what you see, and then you have to develop your plan. Here's my plan, and I'm talking you through it live every day. So I'll be back here tomorrow. If something sets up here the rest of this morning, I'll post it all on Twitter. But until then, enjoy the rest of your day. And if you haven't liked this video yet, please subscribe. It does help the channel and gets a few more people in here. And that would be a good thing for all the traders out there who are struggling. Man, there is 2 fire trucks and ambulances just flew by. Sorry about how loud that might have been, if you could hear that. But anyway. All right, guys, I got to get out of here. So enjoy the rest of your day, and we will see you tomorrow.